You know, we were rocking around selling maybe 50 to 100 houses a year, maybe 200 one year. We'll probably end up selling 300 to 400 homes this year easily. It's because of the team he's put together. So a little bit about Memphis, where we're at right now. We're back to peak prices. So you guys are actually buying houses in 2008 price range, if you want to look at it that way. We're a slow appreciating city for the most part, 4 to 6% on average probably. Right now we're 8 to 10. I see 12, 14% years next year and the next year after that because of inventory. You can't find a large selection of houses. That's why we built up a big staff here, is to find houses, ways that you have to find them today. You know, it's easy to open up the MLS system. We do that twice a day. We look at all the new listings. We get out and look at them quick, fast, make offers on them. But we're sending out mail, direct mail to find houses. We're going to the courthouse steps aggressively. We're buying in bulk. We're calling banks. We're calling out-of-town owners that have vacant houses. We're doing all kinds of things. And to get the inventory that we need to sell to you guys, that's what we have to do. 6-day-a-week job, really a 7-day-a-week job. James probably puts in 14, 15 hours a day, 7 days a week. In the real estate business, you have to do that kind of work. Typical day here at Reedy and Company, we open up at 6:30. Those collection girls open the office, the maintenance girls. Maintenance guys will flow in here. They're managed by 5 superintendents. We just hired our 5th one. So they get their marching orders for the day, whether it's a turn house or a rehabbed house. And the warehouse really helps us in that regard. Our payroll guys can get in and out of the warehouse, load their truck, be gone by 8 o'clock, as opposed to going to Home Depot, meeting other contractors, telling jokes, wasting time, wasting money, this, that, and the other. So the warehouse and this facility here really helped our business. Then around 8 o'clock, the leasing girls get in here. James' teams, they're here by then. We're looking at houses. We're meeting tenants that come through the door. Have a lot of meetings during the day with collection girls. We look at scopes of work for vacant houses, whether they're rehabs or they're turns on rental vacancies. So our goal is to get that house up and running quick. So if a house becomes vacant on Monday, we really can be on that house Tuesday if we get the scope guy in, which is about 48 hours. And then you guys approve your scope of work. We just don't arbitrarily open up the door and go spend $2,000 or $3,000 of your money. We have to have your permission. On emergency things, you know, we're going to fix something like a hot water tank that busts, anything under $500. We pretty much got the go-ahead on that. But we asked your permission on every little thing we do around here for the most part. Tiffany, our client service coordinator, she's terrific. She knows all the answers that probably you have. She doesn't. She comes to Scott, myself, other people. We get that answer back quick to you. The lifeblood of this business are you guys sitting in this room. We want to make sure you succeed. If you do, we do. Rental increases, you know, we're getting about 3% across the board on a new rent on the same property, sometimes 4%. The higher up you go, the faster the houses rent also. We got one hedge fund bunch that will only buy houses like 175 and up. Those houses rent before, if we have a vacancy coming on those houses and we list those houses, we have tenants that lease those houses from the pitchers, believe it or not. 100% occupied, 100% collected on that 1,1600 up. So there's no cap. You guys, as long as you can get mortgages, you know, the better the house, the better the return, the better the appreciation. It's all about the 3 words of real estate: location, 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 and keeping it simple. Heard a lot of good speakers today. I learned a lot from Amanda, from Jesse. I've read the book that Tomas was talking about, The Nothing Down by Robert Allen. If you want to get fired up, read that book. I read it when I was around 25 years old and started having heart palpitations. Nothing down techniques. Well, I used a lot of those techniques, bought a lot of property. When I was about 35, I had 1,200 apartment units, but I was over leveraged. So I jumped into Chapter 11, kept some of those. Chapter 11's bankruptcy. But in any event, got a little bit stronger. I learned a lesson from that. You know, leverage can roll downstream pretty hard, pretty terrible. But one thing, Tomas, in the Robert Allen book, quite a thing that I remember. A lot of these books are based on California experiences with California appreciation, but it works here also. So he suggested you buy 10 houses, one a year. I think we all could buy one house a year, probably two a year. And you keep buying a house every year. On year 11, you go back and you refinance the house you bought in year 1. So you get tax-free income. And year 12, you go back and refinance the house you bought in year 2. Now, you probably could do that in California. Here in Memphis, that's probably a 15, 16-year plan. But how sweet is that to refinance a house, pay no taxes, and throw that over in your nest egg? I'm going to throw it open for questions and answers. I know a lot of people, when they come in, they've got a lot of questions, and I'm happy to take them on. Yes, sir. Well, I'll tell you what, our hottest market right now is in the 80 to 100-year-old housing. It's in our downtown area, our midtown area. And I think in most cities, people that are coming back in, whatnot. But Memphis is such, compared to other big cities, is still small enough you could live in the suburbs. We selectively pick those new houses that we're building. In Memphis, you can get anywhere in 30 minutes. You can get downtown in 30 minutes. But new homes traditionally will appreciate more. But the old housing stock is really on the roar here. Memphis is a high rent per square foot town. You know, we're talking $100 a foot, no, 100 cents a foot, a square foot, yeah. But in any event, the Memphis buyer is a buyer that he's not disciplined enough for the most part to save a down payment. He'd rather have 4 TVs in his house instead of a new house. So, you know, we're at 4%, 4.5% rates. The economy's roaring. Anybody that wants a house can buy a house if they're disciplined enough, but we still have a lot of people that just prefer to be tenants. That's why our rental market's so strong. It's not a day that goes by that there's not an investor coming in town that stops in here to look at the house they bought or to inquire about a new house. That's really exciting. Half the time I'm back there in my office, I say, oh my God, here's another one. But the way James, this group is turning up the heat here, it's probably going to be 2 a day coming in. Yes, sir.
Yeah, something that really intrigued me here was your education of your tenants, the screening and the way you educate them about budget. Can you talk a bit about that?
Sure. So I came up with a budget, a real life budget. You know, we could all go apply for a house loan and sit down in 20 minutes and fill out an application. But our real life budget, it's what you do every day. So we make each tenant put down the amount of money they spend for groceries, gas, fun, Christmas, clothes, hair salons, you know, go and get their toes fixed, cigarettes, beer, stuff like that. Real life expenditures. And then we look at their total income, their net income from their check, and then we add the rent that they're seeking on top of all their bills. 60% of these tenants, and then we subtract it all out, they're in the negative, they're in the hole. It's the first time a lot of these people have actually sat down and done a budget. So anyway, we back them down to what they can afford, and they appreciate it. And that's one reason our collection rate's pretty good. We're not. Yeah, they appreciate that. We look at a size of the family. You know, they're applying maybe for a 1,200 square foot house. They've got 3 kids. We try to push it maybe up to a 1,500 square foot house. Because we know sooner or later they're going to get mad and ticked off, and they're going to move out of the house because it's not big enough. Little things like that. We look at it, you know, if a guy's living in the northern part of town, he's inquiring about a house in the southern part of town, but his credit report reflects that he's lived up north for the last 10, 12 years. We ask the question, why are you moving south? Or why are you moving north? A lot of these people will then move, and then they're out of their comfort zone. They'll move back after the year, at the end of the lease period. You know, the hedge funds really came in late 09, 010 because they weren't convinced that the market didn't have room to fall some more. And really they were right. The market kept, at least here, it kept going south until probably mid-11. But without the hedge funds coming in our city and a lot of other cities, we would have never gotten back to peak prices. Homeowners couldn't sell their houses because they couldn't comp out. They were all underwater. So the hedge funds played a good role. I was invited to speak at the Board of Realtors a few months back. A lot of realtors were angry and mad that so many investors were buying here, so many big investors, and they'll buy on the spot. You know, they'll buy off the internet. If we present a house to a guy at 1 o'clock, well, we got discretion to buy for a couple big funds now, but the houses were plucked. So, you know, then when you remind the realtors that the investor, whether he's a one-guy investor or a big hedge fund, brought the market back to where we could have a real supply and demand market. So if they really look at that, it's been a help. If you don't buy a house now as a homeowner here, if you're not pre-qualified and make an offer that day on something you really, really like, you don't get the house. Multiple offers. My daughter sells in Atlanta. It's the same thing there. I'm sure it's the same way in the cities where you guys are from. So it's real competitive. So you have to be educated. You have to pull a quick trigger. You have to have knowledge of the market, whether you're a home buyer or an investor.
Okay. So I know you said your average time to stay is about 2.75. So what percentage of your leases are renewing, and how long do they renew for, and do you get a rental?
I'd say about 60% renew. We start that process 60 days before the lease ends. So we pretty much know if they're coming or not. They got to get up here and sign the renewal. Then we bump them up, $25, $50 a lease. Even when the market really fell out of bed, the Memphis rents were real solid. Real solid. And we will lower a rent on a piece of property that's slow moving, but something's wrong. Either I bought the wrong house, we bought the wrong house, or maybe something's wrong with the house. Maybe it's the owner that won't invest after he made the investment. That's something you guys are going to have to do too. So once you buy a house, you got to keep investing every now and then, keep the house in tip-top shape. These tenants, they're looking for the best house they can get. They're more savvy now. Property managers are savvy now. You know, here in Memphis, we're a sleepy little town with 4 or 5 property management companies before the crash. Now we've got 5 or 6 large management companies, and maybe 10 to 20 companies that have managed 200, 600 houses. So it's a new asset class that's been well accepted, and it's here to stay. These hedge fund guys will they'll buy yields all the way down to 4%. Foreign money makes 0%. A lot of foreign money's here. But when you add the tax benefits that Jesse went over, the ways you can buy with your 401k money that Amanda went over, you know, it's really exciting.